Hey friends, dividend growth investors love SCHD. What is this thing, and should I put all of my money in it? Instead of owning individual stocks, I own 50 individual stocks. I want to explain this today. Check it out on the screen right now. As you can see, this is a chart from Charles Schwab from the website of SCHD. SCHD is the Schwab U.S. Dividend Equity ETF, and it is meant to track more or less the Dow Jones U.S. Dividend 100 index. As you can see in the chart on the screen, this thing has performed really well. Over the 10-year period, on average, it's delivering 12.73% total returns. That includes the stock price appreciation and also the reinvested dividends. And this number looks very accurate to me as compared to the index, more or less, because I also went over to the Dow Jones website. And as you can see on the screen right now, here's the Dow Jones website. This actually shows the Dow Jones U.S. Dividend 100 index. And on the screenshot you have in front of you right now, over the 10-year period, it has 11.97% annual returns on average. And you can see I actually compare it there to the S&P 500 total returns as well. The number's a little lower than the Charles Schwab website, but I just believe that's probably based on time periods not being exactly the same. Maybe Charles Schwab looked at their data on a different date than Dow Jones did, but more or less the two are pretty close. And what's so exciting to see on the Dow Jones website is this thing has slightly outperformed the S&P 500 over the last 10 years, which is amazing because it did it with a higher component of dividend yield. It's 3.6% starting dividend yield right now, and that's very meaningful to me because if I did buy this ETF, I would be using dividends right away to help pay some of my bills. But we'll get into that later. First, what I want to show, as you can see on the screen, is just one more screenshot from the Dow Jones website. And on the Dow Jones website, you can see without dividends reinvested, it's done 8.36% returns on average per year over the last 10 years, which is still not bad at all. It is fabulous. And the reason I wanted to point that out, again, is I wanted to understand a flavor for myself. If I bought this thing and I did not reinvest dividends, I took the dividends and I used them to pay bills, would I still get some underlying equity gain? And yes, on average, it should be around 8% per year if the last 10 years are a good prediction of the next 10 years, which probably they're not. I think the next 10 years, it's going to offer a little slower growth. But in the video today, I have my 3M whiteboard, and I have a few thoughts about this ETF as it pertains to my situation, because everyone on YouTube's talked about SCHD, but I want to talk about what it could mean for my particular portfolio. So the first thing I want to talk about is just 100 quality dividend stocks. I already own 50 stocks in my portfolio, but this ETF, just by buying one single ticker, it offers instant diversification over 100 stocks. The reason this is so important is because right now in our world, diversification is more important than ever. We just had a banking crisis. I will link in the pinned comment to 2 different videos I did on that. And I know, and you know probably, that some of the companies in my portfolio also have litigation risk right now, which is seemingly more heightened than it's ever been before. And so when I look at dividend stock investing, I'm looking at diversification more than ever before. And I also say this one is quality because of the charts that I just showed you. It's quality which is proven through the performance over the last 10 years. And when I went to the Dow Jones website, I tried to understand how do they select stocks in this index. There was a 46-page white paper that goes through the algorithmic selection criteria. This is trying to buy the most sustainable, the dividend growers, the dividend stocks that have the best promise. And so it's looking for quality. It's not looking for high yield at the expense of growth. It's not looking for high yield that could get cut, dividend cuts. It has a bunch of criteria in that white paper. Honestly, I want to spend more time with the white paper because I didn't. I just looked at it very briefly, but it is an algorithmic process in that stocks are selected or removed from this particular index. And my understanding is the index is reset once a year. So this is a very low turnover ETF as well, which is great for tax consequences. I want to talk about that in the video today. But the first thing that I noticed is this could bring me 100 quality dividend stocks, instant diversification. But the next thing that it could bring me, as you can see on the whiteboard right here, is broad diversification, but also diversification I just don't have. It was so funny. I looked at the top 26 holdings in the fund, and I'm going to show those to you right now. Check it out on the screen in front of you. This is actually the first 13, and then the next 13 I'll go through on the next slide. But I was just looking at the top stocks there, and I don't own a lot of them. And so this fund actually, it's so interesting. I guess the algorithm is selecting stocks that I do not already own. So Broadcom, for example, Cisco, Texas Instruments, Verizon, Merck, Lockheed Martin. I don't own those, and those are the most biggest holdings in the ETF by weight as well. Pepsi I own, Coca-Cola I own, Home Depot, IBM I own, but BlackRock and Amgen I don't own. So we just did some of the holdings there, but I have one more screenshot, as you can see in front of you on the screen right now. I want to show the next tier of stocks that they own. And so as you can see, on this particular screenshot, we've got Pfizer, I own that, but automatic data processing, I don't own that. Altria, I do, Thug Life. Illinois Tools, I don't. EOG, I don't. 3M, I do own, and I love the 3M whiteboard I got today. But Valero, U.S. Bancorp, I don't own. Kimberly-Clark, I do. Newmont, Paychex, Cummins, Allstate, Prudential, I don't own those. And so if I just did a really, really quick test based off of those two screenshots, and I take how many of them do I own divided by how many did I look at, it looks like I own about 31%. Maybe there's 31% overlap, but I actually think it's lower than that, because by weighting a lot of those heavy stocks at the top of the list, I don't have those in my portfolio. So what I loved about SCHD for me is not only the quality of it and the returns and the high starting dividend yield that I could use to pay bills right away, but also that it gives me added diversification that I don't have, which I think is more important than ever these days because of how our world is. It is so difficult to know. I'm going to wake up in the morning, I'm going to turn on the news, and I'm going to see some company blowing up, and it could be one that I own. Who would have guessed that the banking system would be collapsing so poorly right now? Anyway, I want to keep going. As you can see here on the whiteboard, number 3, I want to pay my bills right now. I've talked about this at length, and I'll tell you, I own a lot of dividend stocks, and the dividend stocks I own, especially the ones that are more core to me, I have a really hard time spending the dividends. I reinvest the dividends, but there's certain dividend stocks I own. I'll link in the pinned comment below to a video I did. I talked about my number 1 dividend stock for bill paying power. The reason I like that stock so much is because I don't really care to reinvest the dividend. I'm fine just to pay bills with it right now. And why I like this particular ETF, SCHD, is if I did buy it in my portfolio, I wouldn't mind just paying bills with the dividends right away. I wouldn't have to really reinvest the distribution. It wouldn't really bother me the same way. And this is the psychological side of investing. I have certain stocks I own, like PepsiCo, for example, and I just cannot right now turn off reinvestment. One day I will, but right now I cannot. But I also have the predicament right now that I want to pay more bills right now with dividends. And so the way I could do that perhaps is by buying some SCHD and using that to pay my bills. And so that's point number 3. Point number 4, I'm going to tell you something. I hate selling stocks. I shared on my Patreon recently that I sold Norfolk Southern, NSC. I'm going to link to Patreon in the pinned comment below. I sold that stock because I believe the catastrophe, my heart goes out to anyone affected by that catastrophe in Ohio. It could have much larger ramifications than is priced into the stock right now. But it was painful. It was very painful for me to sell that stock. I did redeploy the money, but I shared where I redeployed on Patreon. But in general, I have a very hard time. It really tormented me to have to think about selling that stock. I was discussing with my wife. I was kind of trying to bounce the ideas off of her and understand, like for me, it's like I'm almost doing something wrong if I sell a stock. And so for me, with that particular stock, it was difficult to sell. I don't want to sell any more stocks. It's a very rare thing for me. But here's what's great about SCHD. Being an algorithmic ETF, and put in the comments below if you know more about this thing than me. I'm really new to this ETF, but my understanding is it will rotate stocks in and out of the index based on its criteria. And so I don't have to really see what's going on. It's kind of like with real estate. I work in the commercial real estate industry, and a lot of you just tuning in at home, put in the comments below if you've ever seen like a home project, or you're a homeowner, or you're a real estate developer, and you've seen kind of what construction looks like. But construction can be really messy. It's kind of like that analogy with the sausage. Everyone, or not everyone, but many people enjoy consuming sausage, but unfortunately how it's made can oftentimes be discouraging to see, at least from what I've heard. I've not seen how it's made. But it's the same analogy with this. For me in particular, I don't like selling stocks, but with SCHD, I don't really have to see it happen. I can just look at SCHD and not worry about what's happening underneath it. And for me, that's very compelling, just where I am as an investor and how I am as an investor. But I want to keep going. As you see next on the screen, number 5, is I want to dampen volatility in my portfolio. I'm going to link in the pinned comment, but I did some videos a few months ago on how I've put some funds into longer term treasuries, and I did that really to dampen volatility in the portfolio, because as long as I hold to maturity, I get the face value back, and along the way I get interest, and it dampens the volatility. That means a lot in times like this. As I get older, I just don't like portfolio volatility. I kind of look at SCHD as the same thing. It brings instant diversification to the portfolio. Say I put 10 or 20% of the portfolio in that on a go-forward basis. Well, that could be an anchor, if you will, that sits kind of below all of my individual stocks, the way that my treasuries do, and it could make the portfolio less volatile, which is better sleep at night and is a win-win for my particular risk tolerance. But I have one more point I want to bring up, and then I'm going to share some numbers with you as well. As you can see here under number 6, it's just automation. I spend a lot of time analyzing stocks. The beauty of something like SCHD is it has beaten the S&P 500 when I look at the last 10 years based on the underlying index, the Dow Jones 100 dividend index that I shared earlier. And it did that algorithmically just by selecting the best possible dividend stocks. It's automation. I don't have to pick individual stocks with this ETF, and that kind of ties into the last point as well, that it's automation, but it's also just kind of an anchor in the portfolio, if you will. If you own SCHD, by the way, go ahead and share in the comments below. Let me know your experience with that ETF as I consider adding money to it. I don't think I'm going to sell all my stocks and redeploy it for certain, but on a go-forward basis, I'm really thinking strongly that I may add this to the portfolio the way I added treasuries, to add some instant cash flow that I can use to pay bills while dampening volatility. In fact, that's what I do with treasuries as well. I use the interest income I earn from the treasuries to pay some bills. Anyway, as you can see on the screen right now, I want to share with you some metrics around SCHD. So as you can see on the screen right now, this particular ETF is trading at $71.07. It's only 12% off the 52-week high. Right there is evidence that the volatility is pretty low with this thing, because most or many of the dividend stocks I own have had more volatility than that. The PE ratio based on 12/31 of 22, the average PE ratio of the stocks in the ETF is 14.91, which is also a good indicator. That's a low PE ratio, so it's buying lower PE stocks. The starting yield is 3.6%, which is higher than my portfolio average, which would actually be a great starting yield. And I think it's a safe starting yield. It's a yield that can grow over time. And we know that because over the last 5 years, on average, they've grown the dividend by 13.7% per year, or the underlying basket of 100 stocks in the ETF on average has grown the dividend by 13.7% per year, which is just astounding to me, because that is, I would guess, higher than my portfolio. It is very nice to see that. $44 billion in this thing. And the expense ratio is only 0.06%, so it's efficient. It doesn't charge high fees. There are 103 holdings now. It's supposed to have 100, but I think that's just because they probably a function of how they rebalance it, when they rebalance it, stocks coming in and out of the index. Turnover is only 14%, which is great. Lower turnover means lower capital gains taxes. And the weighted average market cap of the stocks in the fund on average is $127 billion, which is really helpful to know, because for me, I believe we're in a winner-takes-all society. And so it's really nice to see that on average, this particular fund owns larger companies that can weather the storm. And I think the storm is starting and brewing, but it's still going to probably keep coming. Put in the comments below what you think about that, by the way. And if you're enjoying the video so far, please go ahead and click that like button. It really means the world world to me. I want to keep going though. As you can see on the screen right now, I have a quick analysis, hypothetically, what it would look like if an investor put $100,000 in SCHD. I don't want to spend a lot of time, but what's great is it just shows how the dividend income can go up over time because of the magic of yield on cost. And this is without even reinvesting those dividends. And so it could offer quite a bit of dividend income that would be useful in paying bills. And this interestingly enough, the metrics used here, I'm using a compound annual growth rate on the equity, the underlying equity of about 7% per year, and I'm saying the dividend will grow on average about 8% per year. These metrics are lower than where this particular ETF has been in the past, but I do believe overall we're in the middle, probably right now, of a bit of a slowdown in terms of company growth and also dividend distribution growth. But I want to share something with you because I got a comment a while ago, hey Ian, only buy this in a tax advantaged account because in a taxable account the taxes are no good. But put in the comments below what your experience is. Based on what my research shows, I think it's probably fine because as you can see on the screen here, what I do is I have a chart from Charles Schwab and it shows the ETFs for 2022 and it shows qualified dividend income. And it says that 100% of the income from this particular ETF was qualified dividends. And so I don't own it yet. I haven't had a tax season with it, but my understanding owning it in a taxable account would be that there would be a 1099 div that comes at the end of the year and probably show, hey, you got all these dividends. They're qualified, so they'd be taxed as long-term capital gains. And also there'd probably be some tax paperwork coming through, potentially for turnover if there is any kind of distributions for capital gains or something like that. I don't know. But to me, at least from a quick look, it looks like this could make sense for me in my taxable account, but please put in the comments below if you're seeing something different from your real world experience. I have one more thing I want to share, as you can see on the screen in front of you right now. The last thing I want to show is just a few metrics and a few pieces of information from Charles Schwab website. It shows that the sector diversification is really nice. You all know probably that my portfolio doesn't have a huge focus on IT. And so this is right here where the diversification overnight comes. Also financials, I'm a little lower on financials. So instant diversification, I've got the consumer staples, the healthcare, the industrials. But I really wanted to point out there that it was neat to see that there's some diversification for me personally speaking. Now, obviously it has most of the money in stocks. That's the charter of the fund. And you can see here that 61% of the particular stocks that they own have a market cap over $70 billion, which is really important to me in this particular climate that we're in, because boy, there's an awful lot going on in our world right now with individual stock risk. And so I'll tell you what I'm thinking at this point is I'm not going to dump all of my money in it, but on a go forward basis for all of the reasons outlined today, I'm thinking about starting a position and averaging in. I could see it could become maybe 10%, 20% of the portfolio over time with net new capital, and it would sit there with my treasuries and perform a really solid function as the base of the portfolio with the individual stocks sitting on top. Let me know what you think in the comments below. And before I go, in terms of a full disclosure, I do own some of the stocks mentioned today, especially on the screenshots earlier. I'm long 3M, ticker MMM. I am also long Treasuries. I am long PepsiCo, ticker PEP, Coca-Cola, ticker KO. I'm long Home Depot, HD, IBM, ticker IBM, Pfizer, ticker PFE, Altria, ticker MO. I am long Kimberly-Clark, KMB, 3M. I think I already said that, but ticker MMM as well. I own those stocks in my personal dividend stock portfolio. Also, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Also, today's video is not tax advice. I'm not a licensed tax advisor. Check out the description below for additional disclosures, disclaimers. I love you all. I hope to see you in the comments. Don't forget to subscribe to my channel. It means the world to me. And I will see you all in the next dividend stock investing video.